Good morning, traders. Nice quiet Friday to see us into the weekend. What a start. What a start to the day. Morning, Kay. Surviving?
Morning, Ryan. Morning, everybody. Yes, we are surviving. We are surviving. But I think I don't have to go to the hairdresser anymore. I mean, it was very windy in the market. I lost the rest of my hair.
Yeah, no such problems for us, eh? On that front. Oh, yeah, what a start. What a start. Right, well, everyone's going to want to talk about that. So let's get through all the headlines pretty quickly. We may even have a surprise guest popping on at some point, unless he's fallen back asleep. I won't tell you who, in case he doesn't turn up. Right, China PBOC fixing 719, still no change there. We did have the PBOC out though, saying that they will prevent the building of one-sided collective expectations and self-fulfilling in the FX market, and will forestall exchange rate overshooting risks. So there's a little bit of a nod to the BOJ talking, or rather the MOF BOJ talking about one-sided moves, speculation, that sort of thing. So they are keeping a closer eye on the one, but no big explicit language yet on how far it's moving and whether it's had enough. They also said that they expect the one exchange rate to show two-way fluctuations. So again, it just means they're watching, but not ready to really step in yet, but the eyes are on it. Straight into some of the data, and we had the Japanese national CPI overnight coming in a little bit hotter than expected, or the core number 2.3%. The headline number was a little bit lower than last month, 2.3 versus 2.5. But another one of the core measures came in higher than expectations at 2.3 versus 2.2 expected and 2.4 previously. So overall, the numbers are up there, still running around the BOJ's target, and that's where they want it to stay. They want to see inflation stably around their 2% target level, and that's doing that. PMIs from Japan, though, not such good news. Manufacturing pulling back a bit. So that was a bit of a soggy one, although services did move into expansion by a couple of pips. So not overall too bad. Okay, any changes for the BOJ on those numbers? Does it push on one or the other?
Well, I think we're still open on December. Doesn't change an awful lot to me. No, we're still open there unless I don't know, this $250 billion package is putting a bit of political pressure on the Bank of Japan not to go too fast. But yeah, no, I think the door is still open. That doesn't change too much. We're just hovering just below the 50 mark on the manufacturing. Services still around the 50. No, on the PMIs, I wouldn't cry wolf yet either.
Yeah, no, I think I agree with that. But yeah, definitely, we're still open for a December
Yeah.
move. And speaking of that, as far as economists go, 56% expect a rate hike in December, and they will raise the rate to 0.5% by the end of March, says 90% of economists. Sorry, mate, was you about to add something?
No, it was just because you were talking about China as well. They're keeping an eye. Yeah, I think everybody keeps an eye on the dollar now. It makes sense as well. Yeah, if we'd ever get back up to those, what is it? Up into, because we're not that far. It's less than 1% away, right? Back up into the 730s. Perhaps that's going to be a bit of a small psychological level where they could up the rhetoric, not wanting to let it go through those prior highs, yeah, which is roughly, well, less, but roughly 2% away. So Yeah, I think in China they want to keep this thing in a range. It seems, huh?
Yeah, no, very much so. I have been eyeing this 728 for maybe starting to build some shorts up into these highs. But if we get a break up here, we might go through that. So I might just try and start a little bit higher. But we shall see. I'll probably get FOMO and do it anyway. But I think there might be. It's a low risk trade, shorting up
Yeah,
into this zone, and if it breaks, then you're wrong. So no harm done.
yeah, absolutely. I think if the rhetoric gets strong enough, they at least until Trump gets in the seat, they may want to cap it anywhere between 730 and the prior highs.
Yeah, so one to keep an eye on, most definitely. Right, back to the data and coming over to Australia as well. They had one go one way, one go the other way as well. But the other way, manufacturing improved to 49.4 from 47.3. Services there at 49.6. So moving backwards on that one. When you get these mixed numbers, it doesn't really help a lot, although a lot of countries do rely more on services than manufacturing. RBNZ is next week, and 27 out of 30 of those wise economists see a 50 pip rate cut coming next week. So as far as expectations go, that remains nailed on for a 50. They also see a total of 100 BPs of cuts in 2025. That's the medium forecast there. So further cutting to come. Data again, yesterday before or just in the middle of the flow show, we had the CBI industrial trends. So that improved, funny enough, for November to -19. Where's it gone? There we go. From -29. Not that you'd know it today in some of the numbers. What was looked quite important from that data was that selling prices increased to 11 from a prior 0. So a bit of inflation pressure going on there. BOE's Ramsden says we're back to a more normal economic situation. Well, he said that before today's data at least. BOE's Mann has been waffling again. Says that they should hold rates for longer to evaluate persistence. And then she was a bit all over the place. She then said that she will be ready to make a large change when justified by evidence. So if the economy falls out of bed, she'll be happy to go with bigger cuts. That's coming from a big hawk. Problem is, they're probably doing it already, voting without her anyway, so she'll be late to that party. Sees the expected 100 basis points of cuts through to the end of next year as too aggressive, but we already know they have come down somewhat in the prior data, particularly after the CPI data. Retail sales looked a bit shocking from the UK, as usual, volatile numbers. So we've got some negative numbers there. Retail sales down 0.7%. Year on year numbers coming down as well. Whatever you look at, not looking good at all for the UK, but these numbers are jumpy as hell, so they can be all over the shop a little bit. And then we got the good old PMIs coming in from the Eurozone, and what a lot of fun they've been. France kicked the gate open with manufacturing dropping to 43.2, was expected to rise a pip. Services also dropped back 45.7, so a big stinker for France. Germany also stank. We got a big decent jump last month, and that's proved to be very dead cattish. We went from 40 something to 43 last month. Although that has improved by a pip, services went up to 51.6 last time, and they dropped back to 49.4, so deeply into contraction. Well, a deeper reversal, shall we say, decent over 2 pip move back. That's quite large. The pan-Eurozone number as well, pulling back. 45.2 for manufacturing, 49.2 into contraction for services. Then the good old UK, similar, manufacturing pulling back, was expected to go into positive territory. Services just pulled back to the line. Again, was expected to increase. That aside, it really was the PMIs that have done for the euro this morning. Those of you waking up and looking at your charts will have already seen the damage. It was all largely triggered by what went on in these PMIs, but we'll look at the prices in a moment. ECB's Pastelidis says the approach to rate cuts must be gradual. Again, these comments coming before today's data and moves. ECB's Hawke Holtzman says warnings of undershooting 2% aren't warranted. So he's not as worried as the likes of Stornice is about inflation undershoots. We shall see about that. He says a December cut is the likeliest outcome, but not certain. Policy must stay restrictive amid price risks. Whilst we're in Germany, the IG Metall chief negotiator says that negotiations with Volkswagen to continue on December the 19th. Factory closures are still not ruled out, and they will recommend strikes from the 1st of December. So again, this is one of the frying pans on fire in Germany. Now, after all that said and done, all the data and everything, we have obviously seen a move in price expectations for the ECB. We're now pricing 150 basis points of cuts in 2025. That's the first time since last month. And the expectations for December have changed, as you will probably no doubt be aware. We were somewhere sub 20% for a 50 pip cut for December. We are now at 50% after all that data. So that's the damage that's been done. Bank of England rates as well. Futures now showing 77 basis points of cuts by the end of 2025. It was 72 pips before the data. So really, really looking bad for that. Again, we'll get stuck into the prices in a moment. Just go over some of the other data. US data. We finally got a little bit of data out anyway. Philly Fed came in with a soft headline, but we know what the Fed are focused on at the moment, and that's employment and prices. Employment actually rose from a negative. Okay, this is only a small data point, one of the regionals, but still, you know, I had someone asking me yesterday, well, it was a bad number just because they were looking at the headline. And my reply was, what are the Fed looking at? Fed are looking at employment and particularly prices. That came down, prices paid a little bit, but still a pretty sticky number. Canada PPI and raw materials prices as well, also looking sticky following the CPI data in terms of that stickiness there. Existing home sales up by 10k, so nothing to see there. Fed's Goolsby rates will be a fair bit lower over the next year. Could slow the rate of cuts as the Fed moves closer to where rates will settle. He doesn't know where that is, though. He says neutral rate is a long way below where we are now. Fed's Schmid, Fed will wait to react to fiscal policy. Lastly, just the geopolitical stuff. Putin was out yesterday afternoon, said after long-range strikes from Ukraine, regional conflict has gained elements of a global conflict. Says attacks with Western weapons will not change the outcome of the special operation. He did confirm that Russia fired new medium-range ballistic missile. Says we have the right to use weapons against military objects of those who use weapons against us. And in case of escalation, we will respond symmetrically. Lastly, Trump, he's still adding to the old crypto fire. His media firm may be looking at a crypto payment service, according to New York Times. So it's all crypto good news from there. Right, let's get into it. Kay, what happened in the euro?
Well, as we were already saying that yesterday, right? It was looking a little bit like 105 may give way. The thing is, the PMIs were just the anchor that really was too heavy around the neck of the euro. Um, I think the geopolitics are in the mix. Trump threatening to put tariffs on European cars. And then you had those PMIs. That was really the abandoned ship trade this morning, right? It's we've been talking about it. I mean, euro was feeling heavy. Data weren't looking great. The risk was, and now we've seen it. That France post Olympics was in a bit of a mess, and we've got confirmation of it, everything. So that's what happened today. Has to be said, that after that big dump that we had, we're nearly a big figure of the lows in the euro. So it's a bit typical as well of a Friday kind of move, where everybody goes like throws in the towel, doesn't want to hear from it anymore. Fears, I think, as well, because not only the euro dumped, but it dragged other currencies as well in its slipstream. I think already a bit the market looking forward to what's coming this afternoon, because if I am not mistaken, the revisions or these PMIs that we have, the data have been taken post-elections, if I am correct. I might be mistaken. Maybe some of the audience have a better view on that. I was trying to figure it out, but I think it may be data from after the elections. And if that were to be the case, the market is also rumored that those data may be better. But now, if uh, if we need any more mess, give us a round of very weak US PMIs to drive everything the other way around. Yeah, so that's where we are in I think in the euro. Euro is still on the weak side of the market. So it is logic that the market is ramping up, or let's say a better expression of it is that the bond market is really saying like, well, I don't really want to be. It's the rates market. Instruments. I don't really want to be in euros either. Just get me out of everything. Um, a bigger cut. I'm not sure that I'm yet on that side, because I would suspect that Lagarde and her buddies may wait or may want to wait until Trump is really in the seat to go for a potentially bigger cut. Doing it now when the euro is already coming off. Data are weak, yes. But the data were weak before as well, especially in Germany. So why didn't they go for like massive cuts either on the last round? So I'm not sure whether I'm in the camp of a bigger cut yet, because it would be counterproductive for inflation, right? So
Yeah.
in my personal view, they will want to wait until Trump is really in the seat to go for another bigger cut. But yeah, it's just euro is weak.
Yeah,
There's
and the weird thing was it started yesterday afternoon, and I was keeping an eye on it because, as I've just showed quickly there, I'll show it again. Yields weren't moving at all, so we got the first break of 105 after the fix, the London fix. And I was watching yields. I thought, well, what's going on here with the dollar? And the dollar was strengthening on one side, not on the other, and yields were doing nothing. So it was a bit of a strange move, but technically, you're looking at this, it's tech perfection. We broke the level, and then this morning we held the level just before
and on the
the
other
PMI started dropping.
yeah, and you look at the other side of the pairs as well. The dollar is still doing pretty well.
Yeah,
Well, selectively, but the dollar is still doing quite well as well. Just because of the geopolitics, the Ukraine Russia situation is closer to Europe, is at Europe's door, right, front door.
yeah,
So I think that has had an effect as well on why the dollar is perhaps a better bid. Still,
and
um,
yeah,
a lot of
just
things.
before. Sorry, mate. Yeah, just before I bring in our special guest, I did want to ask, do you think there's been a bit of a knock on here? Because obviously the market now getting all dovish over the ECB. Do you think it's brought to light that the US is still standing out on its own? You know, we're getting the 50 from the RBNZ next week.
Mm.
The market now playing up a 50
Yeah.
for the ECB. Everyone, you know, Canada as well, the BOC, they might do another large one. Do you think markets just had another bit of a kick in the arse to
Yeah.
say the US is exceptionalism again, and all the rest are cutting?
Well, yeah. I mean, the euro is yeah. I mean, call it exceptionalism or call it just standing outside of the doldrums that we see in other stuff like you just mentioned the Kiwi. Then let's not forget sterling as well as come under a bit of pressure. We're seeing those retail sales coming in a bit lower than expected as well. We've got uncertainty within the MPC and the Bank of England. There's a lot going on in the other countries and currencies just to make it enough for the dollar to already remain a bit on its own, right?
Yeah, very much so. Very much so. So someone who's shit the bed this morning had his alarms going off. Morning, Blake.
Good morning. I did
It's
not
still night
expect to
time
be
there,
up this
isn't
early this morning. Good morning, guys.
it? It's still night
Right.
time where you are, isn't it?
It's dark. Yeah, I literally what had happened, my phone started buzzing, and as the euro is trading below 104, I didn't think it was going to trade below 104. It got me up. I got up, I looked at quotes, and I'm like, oh shoot, I'm not going to be able to go to sleep. So here I am, usually in bed, and it's still 3:50 in the morning here.
Yeah, well, that's worth being woken up for when you're short from what 105.19.
My short right now is at 105.09.
Oh
But
no.
I'm looking to actually add to this short. I first of all getting up and being jolted by this big of a move. That's 130 pip from the high, 170 pip move from the highs. I mean, that's pretty massive. I would assume that today's lows, whatever they were, is 103 30s. That's probably not going to be taken out. That seems to me like a pretty exhaustion type of move. I think K-Man, you just said that it's kind of like the Friday, I don't want to deal with it anymore. Get me out. Whatever type of move. I still see that technically we could go lower, but I would assume that we're not going much lower than 104 later today. My assumption is anyway. I don't know. How do you guys feel about this?
Yeah, I think it's got every chance of keep going, particularly if we get strong US data today. I reckon we'll go and have another look down there.
You think so? Yeah, I mean, that I was one of the things that I do in the mornings at now that we had this time change is I get up and I take a walk, and it's dark, and I've got it's late outside. It's still dark outside, and I take a long walk early in the morning, listen to some podcasts. And I was just walking today and thinking about just how different the Eurozone, and I was listening to an economist, and how that she was referencing Europe and the slow economy there, and how the US economy is so different. I mean, it's obviously it's being played out through currencies, and it's also playing out through, yields. But how big of a, I guess I want to ask you guys, how big of an impact? I mean, this dollar, we call it the dollar wrecking ball. It's kind of what it is at this moment. At what point does it become a problem for investors, and the markets start to take notice? What do you guys think about that?
Well, I would say that we're still in this move of we want to be in the US for several reasons, and as we've been talking over the shows, it's not only data coming out, but it's like we're in in the midst of the handover, and that's going to be ongoing for another month and a half or 2 months. We've got geopolitical risk left, right, and center. Yeah, then you have the data coming out. Then you have, like, let's not forget that we are a week away from the last month of the year. You have all those asset managers, big fund managers needing to clean the books or do some window dressing for the end of the year. It's going to be a bit of a mess. But in the midst of this mess, one has to note that, and let's not forget the Middle East situation as well. That thing is also on Europe's doorstep rather than the US's doorstep. The US can be involved in a lot of things, and it is de facto involved in a lot of things. But you look geographically, where do you want to be right now, right? And that is the big question. So. Somewhere, I think it may be helping stuff like the Aussie as well, which again is not really falling out of bed yet. But then your big block, the dollar block, is standing out because you have a government that's coming in wanting to do stuff to really promote the US again. So I think it makes a bit sense that people rather want to be in the dollar, but how far can it go? We will have to see if we get a few more moves like we have had this morning. I think that may actually ring sort of the end of the big shift, and then probably by then probably the market is going to be, or a lot of investors are going to be mainly in US instruments. So then it's probably time to think about what are they going to do next, because the that is, I think, I don't know in time or even price, but I think we are not too far away from that point where a lot of asset managers, a lot of money managers have moved a lot of stuff into the dollar on the one side and into risk sensitive instruments on the other side. I don't want to take Bitcoin or so, that's a different thing. But you look, for instance, the revival of gold. It rallied $150 or so from the low. I think that's the other side of the trade is that you want to be diversified somewhere. But for sure, the dollar is now, or the US is now where the market wants to be, because all the rest is pretty crappy or
Yeah,
risky.
I was gonna ask you guys, when we start talking, and I know it's a little early to talk about the end of year flows, when equities are as strong as they are, typically you're gonna have dollar selling going into year end. Wouldn't that be the case, Cayman?
I,
And I know you do a lot of,
mm,
calculations yourself for like end of month and
yeah.
end of year flows.
I think there's a risk. I think there is a risk building, and the risk is building also because it's been delayed due to the election. And yeah, remember last year, it all started somewhere in October. We had that very early, actually. We had that very very good labor report coming out, and then all of a sudden, that was the high for the dollar. And then well, due to stock market rallies, etc., 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 the dollar started to weaken. But then it accelerated into year end. Well, this year it's probably been delayed. It's been probably also very distorted because of the elections, because people want their money somewhere. But at the end of the day, I think there is this risk of a very late reversal, actually, because because of the stock markets, because of the FX neutral funds. They will have to start managing the books as well. But it's going to be messy. I think it's really going to be messy. But I must say that I'm looking at stuff like again, as people know in the room, I started to shyly leg into to long Aussie. I think that's perhaps one of those who can benefit, unless the geopolitical situation completely deteriorates, in which case you don't want to be in anything. But all things equal, those could actually benefit towards the end of the year. But it's still a very fragile idea as well, I must say. I'm not out of it yet.
Right, because like let's say, and I'm just I'm just talking about like technically what I see, and I use the ForexAnalytix Twitter account to kind of point it out. You know, technically the euro should trade somewhere around 103, maybe even a little bit lower, and you know some would argue that we could see as low as like 102. You know, we start seeing those levels. Where does that put the Aussie? Because I know what you're talking about, and I love the idea, and I know it's been really strong as of late. But you know, yeah, if we drop another 150 pips in the euro, does it take the Aussie with it at some point? You know, before we find a low.
Yeah, it did this morning, but then again, we briefly dipped below 64.80. And we're back above 65 right now.
Yeah.
I think to drop lower materially, it's going to be the US data probably outperforming. And again, this afternoon or this morning for you, the US PMIs are a bit of a risk play for the dollar either way. Imagine that they come out better if the data have been taken after the elections. It could mean that that then yes, the dollar puts in a very good Friday.
Ryan, I wanted to ask you this question because, you know, one of the benefits of being in our room, in the ForexAnalytix room, is we have a lot of conversations about different topics. And one of the things that you pointed out in the chat room is about the option scarcity at these levels, and one of the could have been one of the catalysts that drove the euro lower. Can you explain to traders that are listening in that have no freaking idea about what they're still dumbfounded by the magnitude of this move and why that could have happened?
Yeah, I'll put it in very simple terms. I'll let Kay talk about the Greeks and the gammas and all that sort of stuff that affects it. But as you can see on the screen there, this is because you and me were talking about this last night.
Yep.
Just the option expiries, okay, and over the next month ahead. So all these little bubbles are the expiries. You can see the dates there. You can see the strikes down the bottom. So you get all the big business down around the big figures.
Can I just add real quick, because in ForexAnalytix, like every night you post the big options expiries for the next day, and this is where you derive the data from, correct?
Yeah, this is
Okay.
a data I look at, and
Okay.
yeah, I'll show everyone quickly what we do there. So
Ryan, where's Neo in the Matrix? Where's Neo in that picture?
Yeah, so here's the option expiries under this tab, the orders and options expiries. So you get those every day. I post those every night usually. But yeah, in terms of this, it looks funny. So all these bubbles are a mix of, they're either calls, puts, or a mixed bunch. Okay, so usually the big figures, the half figures, are where you get the most accumulation of expiries. So, you know, 104, 104.50, 105, 105.50, 106, that sort of thing. And you can see where things are really busy. Now, we've had a ton of 105 expiries going off the last week or so, some quite decent size, which is probably why we've hit that level and stayed around there. But anyway, going back to Blake's point, as you can see here, we've got a big concentration of expiries above 105 than we have below 105. Okay, so the market isn't really set up in the options side of things to protect, hedge against downside moves. So when you do get a break of a big level, there's a bit of a hole to fill, a bit of a gap to fill. Now, as I said, there's a lot of more complex stuff going on, you know, gamma, delta, all that sort of stuff, where it can force traders to then have to chase the market lower to cover what they're missing out on. But when you see things like this, where the option market is a bit one-sided around a big level, it can add to the moves you see today. You know, there's a reason why we created all the way down to 103.30, but then bounced back pretty quickly. If the market was really that bearish, we'd still be down on those lows. So it has an element of lots of stops going off, obviously, and maybe some option covering in there as well. That's all now done. What we'll see now is this side of the field filling up more over the days and weeks ahead, probably, because now the option market's been given a bit of a knock, and it will want to start covering for further downside. So we get a bit of a shift. I don't know if there's anything you want to add to that, Kay.
No. I mean, if the options don't provide, usually if you got a lot of options, it's people say magnets, but it's actually, if you got a lot of options around levels, they actually provide liquidity, because you're going to see buyers and sellers wanting to hedge their options outstanding, so it adds liquidity, and this is exactly what you're showing here. If there's little going on in the options, that bit of liquidity is just not there, and that's in simple terms the one of the reasons why you can get outsides move out of all of a sudden, you know. And also, if you look at euro dollar, the only thing I wanted to add, because I'm seeing on Twitter or wherever else people saying like, oh, there's big expiries in euro dollar, there's $1 billion euro going up at a certain level. Forget about $1 billion euro, okay? $1 billion euro is nothing in the global markets. The 3 billion starts to be a little bit more interesting. But and I'm talking about euro dollar, okay? Don't misinterpret me. I mean, if you're talking about stuff like the Kiwi, if you got 3 billion Kiwi, it's a big expiry. It's a really big expiry. But if you got like $1 billion euro, I mean, this is just in a few minutes the market trades €1 billion. I mean, this is nothing. There's nothing special about €1 billion. You really have to go with bigger stuff. But again, as Ryan said, if you have very little option and very little option interest, that means that there's that bit less liquidity in markets.
Yeah, I mean, as you can see, we've had a pretty decent sizes coming in around the 105s, 105.10s, 20s, up to that area. It wasn't a surprise this morning when I sat down, knowing that we've got near on 3 billion up here, to find that the euro hadn't gone too far south and we were back up, basically trading up at 105, because that's the option effect. You'll have, that's the magnet effect, but it's not really a magnet. It's just, as Kay said, traders trading around the moves that have happened. So outside of the PMIs, I wouldn't have been surprised if we'd been trading 105, 10, 15, 104, 80s, that sort of thing, going through the session. Yeah, so we've got some fairly decent ones rolling off in the 105s, a couple next week. These two bubbles here, they're not over 2 billion, but that can obviously change because there's business being done today and whatnot, and then it sort of calms down a little bit in the early part of next week. And then, as you can see there, we've got very little in the 105 area. So maybe once this is cleared out, we get a bit of a better idea of what's going on for now.
Hey, Ryan, I know this show's probably a little long in the tooth, and it's like in just a little bit we're going to end up having the face show. But can I ask one last question? And
we've got another half hour to go yet, mate.
No, seriously, it's like holy cow. The Euro Swiss traded down to 92 cents, and obviously that's been in focus because of what's happening and with the escalation in Russia and Ukraine, and it's been a big risk for the euro as a whole. But I heard K-Man yesterday talking about this too on the Flow Show. There's got to be a level that the Swiss National Bank is looking at. And matter of fact, I think Schlegel's set to speak here in a little bit this today. He's the new head of the Swiss National Bank. Anyway, there's got to be a level where they start defending, I would think. But do you think they're going to do that while ahead of the end of the year with knowing that Trump is going to come into office and hopefully try to put things to bed with Russia, just kind of settle things down. But between now and then, I mean, the Euro Swiss could end up trading towards 90 cents if things continue to escalate. But do you guys think there's going to be a floor at some point?
Yeah,
Hey, before you answer, do you want me to bounce the chart over to you? Because I know you got better techers on Euro Swiss than I have.
Oh, yeah,
no,
I can, I'll grab this real quick.
Blake to me.
But to K-Man,
Oh,
do you
right.
want to get it?
No,
Or
I
do you
mean,
want me to
I
do it?
don't know
You
who
can fight
Ryan was
over it.
talking to.
Either,
Yeah.
well, I'll talk UK, but either you can
Oh,
fight over it.
go to
Friday.
K-Man then. That's
Friday
fine.
fight night.
Yeah.
Okay.
You can arm wrestle for
Let
it.
me share my Euro
I show my charts plenty. The K-Man can show his, yeah, for sure.
here. So here, Euro Swiss.
Yep.
That's where we went to. And let me just where's whoa.
Because it seems dangerous right now. I mean, it seems like, oh
Yeah,
my God.
but to the question whether they intervened, I think they may have come in, but not in the way like an aggressive, like call up banks and like a Bank of Japan or MOF intervention, right?
Right.
This is not the way they are going to do it. At least not
Bit of
now.
smoothing.
At least not until sorry?
Bit of smoothing.
Yeah, exactly. So I think they may have been there this morning. I actually think they may have been, but we will only know when we see the FX data out on in the first end of the first week of the next month. But I do think that they may have come there because they were talking about it, and I think they may have been there, but and it's going to create a bounce, but as I said, we can't also look beside the fact that the euro dollar in itself bounced a big figure. So the euro Swiss will bounce, euro sterling bounced from the low, everything bounced. So yeah, I do think they may be there just to smooth things, but I don't think they will go in aggressively trying to put it higher again before before Trump comes in or before or into the end of year. They must already somewhere having a little bit of a vague idea because remember last year we saw massive Swiss buying into the year end.
Yeah.
Um, I think they must have a vague idea about what's to do this year as well. So I don't think that they will now go and say like, okay, we want to put this back up at 94 or 93 and a half or 94. I don't think they will. I think they will smoothen the move lower, and then we will see once Trump comes into office. But I do think these kind of moves they may be involved. I think they may indeed be involved. Yeah.
Which could inadvertently be supporting the euro at
No,
this.
actually not.
Oh,
That
okay.
is the big misunderstanding of people when they look at the S&B. It's the opposite. I'm going to for one more time explain the intervention that the S&B is doing when they are smoothing the market. They run about 30 or 35% of each euro and dollar in their reserves, okay? And the rest much smaller, sterling, yen, and other stuff, and gold and things like that.
Sure.
But if you buy Euro Swiss, okay, if Euro Swiss is tanking, dollar Swiss they don't need to buy because dollar Swiss is not going really lower. It was a euro tanking, right? So assuming that they buy Euro Swiss at 92 the figure, okay, so they are long euro. What what do they have to do to get to an equal amount of euros and dollars into their reserves? They have to actually sell euro dollar
That
because
makes sense.
you buy one euro dollar, but you want 50-50 of each euro and dollars. You actually have to sell half a euro dollar. When the S&B really intervenes, it is in fact weighing on the euro dollar. And that's somewhere a misunderstanding that is, and especially I would say in the retail market, but it is the opposite. When they intervene in euro Swiss, it actually weighs on the euro dollar.
Got it. Got it. Okay. Well, that's a great explanation. Thank you
Okay,
guys. I
no
appreciate it.
worries.
And like I said,
Let
I
me
know this
just
show's a little long. Oh, go
yeah,
ahead.
no problem. Let me just look at this one, and then I'll pass it over to Ryan. Gold, okay. So guys, we've been talking. We talk about gold every day, okay. But so we've gone through this zone. We've gone through the 50% yesterday. As yesterday we had this retest right there. We moved higher again. Asia. bought it, and that is one thing that I'm always looking very, very closely at. And we're already through the 61.8 of this setback. Okay, uh, now we are testing this 2710 zone. I think this is the next little zone on gold here. But the fact that we are relatively easily through 61.8, bearing in mind what we have seen on the dollar, we barely had a couple of dollars setback on gold this morning, and we are ahead of another weekend where the market may not want to be short risky assets. So in my opinion, we are going to end the week on a relatively positive note. Watch where it is possible that we just, and depending of course on the US data coming out, it is possible that we get back to the 61.8, and there we see what is happening. Okay, as usual, been managing my positions. You know my trading style. So I've let a few go on the way up, and we will see what happens here now, and then the opening next Monday, and
I wanted to ask about this one.
Yeah.
It feels like this one's moving more on risk than it was on
Yeah.
central bank buying and everything else that was going on. So it's a different market potentially in this move than it was before.
Yeah, and also Ryan, while I was off, I think there's been a lot of dollar buying for one thing, but rebalancing between crypto and gold for a while. But I do I've got I'm not saying that they are back the Chinese buying. I haven't seen the data, but you know, I'm always very, very closely watching what happens through the Asian sessions, and it's been like couple of sessions now in a row that we come out of Asia on a higher level as well. So I still keep an eye on it. I'm not necessarily saying it's central banks buying, but you do have Asian money managers as well, right?
Yeah.
Singapore is a big one, by the way. So yeah, it is different. It is different. It is risk, and that's what I've also been saying. Like imagine, by I don't know what miracle, all of a sudden Ukraine and Russia find an agreement. This thing is probably going to trade down to 26 or even below. Huh?
Yeah, and then the Chinese will be coming back in.
Probably, yeah. You know.
Blake, you got anything you want to add before we shut up shop?
No, I've got to try to get my my head straight before the face show. But I want to say it was nice joining you guys. I don't want to make this a common occurrence. I'd actually like to sleep the whole night, but it is sure nice being able to chat with you guys and with the European crew, everybody that's listening in today. So thanks for having me.
Yeah, nice to have you on, mate. Nice to have a change of voice on here for a bit, and yeah, nice one on your euro dollar short as well. Well played for that one.
Thank you, sir.
Yeah. Okay, boys and girls, thank you to K-Man as well as Blake, and thanks as always for coming to the Flow Show this week and giving us your support. I hope you have a great day ahead. Stay safe amid this volatility. Have a safe and peaceful weekend. Catch us on the Face Show. Otherwise, we'll see you next week. Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.